Can you provide more details on the strong first quarter for Volkswagen, including sales and margins?
Yeah, we had indeed a very encouraging start into the year 2023 with both revenues and our underlying operative margin significantly up. Yeah, our revenues was up more than 20%. Our underlying margin, which is the margin before the effects from our commodity hedges, stand at 9.3%. This is well above our margin corridor. We sold 140,000 BEVs. We have an order bank still of 1.8 million cars in Europe alone. So customer demand is still strong. And you remember when we released our targets for 2023, quite some people thought we were quite ambitious, but based on this promising start in the first quarter and based on an order bank of 1.8 million cars in Europe, we are quite confident that we can fully achieve our financial outlook.
How would you rank the growth drivers for Volkswagen in the US, Europe and China? What factors do you see driving growth in each of these markets, particularly in Europe with its backlog of orders?
Look, we saw very strong growth both in Europe and in the US. In China, we had a slower start both in terms of industry and in terms of our own sales. But we expect specifically in Europe and in China and in Europe and in the US, demand will be strong. Our deliveries will be strong, and this will be a significant push also for the second half of the year. In Europe, I said it already, we have an order backlog of 1.8 million cars. This will carry us well into the year 2023.
How are orders for Volkswagen in Europe? Have they slowed down substantially?
It's actually quite different at Volkswagen. Look, we had quite some deliveries. The deliveries were up 7.5%. The deliveries were up more than 20% in Europe, and still we sit on an order bank of 1.8 million cars. So the order intake was rather strong, specifically on the ICE cars. It was a little bit weaker on the BEV side, but this has also something to do with like a effect that we saw at the end of last year when state subsidies were running out. So there were a lot of pre-orders last year. But also on the BEV side, we expect orders to pick up on the remainder of the year, specifically with also new cars hitting the showrooms. I'm standing here in front of an ID.7. It's a great car. It will hit the showroom in the second half of the year. It's a lot of technology, a range of 700 kilometers. So we're quite confident that we can achieve our targets also on the delivery side.
Do you think car prices have peaked, and could we expect them to come down?
We think we have a rather strong position in the current pricing environment. First and foremost, we have strong and fascinating brands. We have Porsche, we have Audi, Lamborghini, Bentley, even Volkswagen. And as said before, we sit on a huge order bank, specifically on the ICE cars, but also on the PVs cars in Europe. Fascinating cars are hitting the showroom in the second half of the year. And last but not least, we have a clear strategy that our first focus is margin and margin quality rather than volume and market share. So based on that, I'm not worried about our pricing discipline.
Are you considering cutting prices to compete with Tesla?
As just mentioned, first and foremost, we have a very strong position, both in terms of orders and in terms of product substance. And second, we have our strategy. And we don't want to lose our target out of sight, margin parity, in the next 2 to 3 years at ICE and BEVs. And for that, we need also strong pricing on the BEV side.
Regarding margins, do you see cost cutting as a way to maintain margins?
I always said that the competition will increase. Look, with semiconductors supply improving, with demand is slightly coming down, Q3, Q4 will see a much intensified competition. And we're preparing for that accordingly. On the one side, we have this strong product substance, but on the other hand, we are not naive. We have to prepare on the cost side, both in terms of productivity, in terms of fixed cost discipline. We need a program at brand Volkswagen to improve margin. So these are the things we set up right now.
What did the VW board leave with after their visit to China recently, where the launch of a new model took place?
We have been in China. I personally also spent 3 days in China. We had a look at competition. We talked to the teams on the ground. We talked to customers. We talked to our JV partners. And it's clear we have a very strong position in China. But although we have that strong position, we have to accelerate. We have to accelerate specifically on the BEV side. And I would say in three dimensions. First, in ADAS, so in driving assistance function, in in-car infotainment, but also in general in the overall speed at which we adapt to local Chinese customer needs. And in all these three areas, we made significant decisions already. We teamed up with Horizon Robotics on the ADAS side. We created some JVs and some collaborations on the in-car infotainment. And most importantly, we founded the 100% TechCo with, in the midterm, 2,000 developers on the ground in China who develop in China for China to speed up the development. And last but not least, we introduced the ID.7. It's a great car. So with all these measures we have in place already, we are quite confident that we can play a leading role in China in the future.
Is VW targeting a specific market share in China, and how do you plan to compete against companies like BYD?
We are still a market leader in ICE cars, that's obvious. We had a slow start in BEVs in 2023, but we want to pick up in the remainder of the year. But for China, it's true what we always say for the rest of the world. We focus on the quality and margin of the business rather than on volume and market share.
What is your perspective on the outlook for the auto sector, and to what extent do macro conditions versus industry-specific factors play a role in this?
No, of course, we look into a challenging environment. We have a discussion around banks and we have inflation. That obviously gives some uncertainty. For the auto sector, we still believe the overall industry will increase by 7 to 8%. This is our current assumption. But yes, there will be increased competition in the second half of the year. But as said, based on a good product substance, strong product substance, based on our strong brands, and we're preparing on the cost side, we are quite confident that we can achieve our outlook, financial outlook, specifically also in terms of our margin target between 7.5% and 8.5%.
Altman says keep raising rates to maintain confidence and address inflation. Pausing would signal banking turmoil is worse than it is. Pausing the rate hikes would exacerbate issues and cause market turmoil, would also signal Fed knows something about banks that markets don't. Altman predicts a moderate recession in the second half of 2023 and decline in inflation to 3% by year end. He believes that Fed shouldn't pause in raising rates to catch up for being late to address inflation. Stopping now and being wrong about inflation would be catastrophic. Feds need to keep raising rates to catch up despite a difficult year. He believes that the regional bank crisis could lead to tightening of around 100 basis points on the funds rate due to a combination of quantitative tightening and lesser lending capacity and willingness.